Good morning, traders. This is the wake up call. Last night, the highlight of trading was the release by the Reserve Bank of Australia its rate decision. I and most traders were just expecting there to be some sort of commentary following that would have been compelling to find out about the state of the Chinese economy and how this could affect Aussie and basically the rest of the world if there was some sort of slowdown. Well, the Aussie government surprised most traders and made an unexpected 25 basis point rate change in its rate change and lowered to 3.25%. This sent the Aussie hurling lower. The pair did move initially lower to moved lower initially, basically in one swipe move. It moved down from 130.64 right below the bottom of the fib level that we have been talking about for the last week or so at 103.40, and settled within the first 5 minutes down at 103.23. I didn't want to chase the trade there. I was looking for a move back up towards the 103.40 to get short. It looks like the pair has become very comfortable around 103. As we spoke about earlier, though, it has initial support at 102.80. A move down to that level could find new buyers, and if we break below that level, the cross will initially hit this descending trend line. Let's take a look at that on a bigger chart. The descending trend line that has capped the price action in the channel over the last few weeks, as the pair has been heading generally lower over the last 2 weeks, and so this level right here, there's a good chance that the cross will hold at this price, and we could get a little bit of a bounce before looking for initial sell-off lower. But if we do break below this level, the game's on for a move back down towards 101.75 and 101. So this is going to be the pair that most traders are going to be watching today, and it could indicate that risk off will be will be in play across the board, as the Australian government did indicate that there is a significant slowdown from the world's second biggest economy. The next pair I'll be taking a watch is New Zealand USD, just because the pair actually has reversed quite a bit in the last hour, but the pair was moving up towards, once again, the resistance zone at 0.8350, and we all know how we're playing this cross right now at the moment. And I would definitely like to short the pair at any move up towards 83.50. 83.50, but we are playing the zones. We have the resistance zone 83.50, 83, and we have the support zone at 82.20 and 81.84. We're playing the balances in between these two levels, and I'm looking for trying just to get the meat in between. Right here is my main focus, but heading into this week, I was looking to short the pair up towards the top here, looking for a meaningful move down and maybe even a break of the support towards the 80.30 level. The next pair we're going to look at is just the majors in general, to give you a regular look at the crosses. As we know, the Euro USD hasn't been doing much over the last week. It broke above the trend line. It moved down to start the week up to 128.20 and then has bounced higher. Since that point, it has moved in a 128.87, basically in a 50 fib range. It has not been setting the world on fire. If we get a break of the range to the top or bottom, it could indicate the trend for the day, but I don't know if I would trade off that significantly, but you could see a trade below 128.80 could mean a trade lower up to 129.38 could mean a move higher. What I would be looking for more significantly, though, would be a move up towards the 129.70, 130 level for a chance to go short for a push down, and a move down to 128.20 that would also be in the range for a push higher. We break that level, we hit the trend line support much lower at 127.62. We have to keep in mind today that there is also no news on the table again, so it could just be another random day of trading. I mean, this could occur all the way until Tuesday, on Thursday, when we start having the real meat of the economic decisions pouring out. We'll look at the Great Britain USD. Right now, the pair is kind of reversing. It's pushing a little bit lower. What we're watching, though, are these two trend lines. This is the descending trend line that had acted as resistance moving into this week, but now it's acting as support. This has contained the price action for over a year and a half, and then this trend line on the other side is really just the trend line from the recent move higher, and a break of that could confirm that the trend is on its way lower. So we're going to have some sort of reaction that's going to have to occur right here at this level. So we're just watching this for price. We're watching this. So basically my eyes will be on the 160.50 level, and any pushback up towards the 162.50, 163. I'd consider a gift to go shorter. The CAD still in the support zone. It's all about breaking above or below 0.9850. We break above 0.9850, the trend can be reversed, and we could be looking for a move higher towards 99.50 up to the parity. If we break back below the if we remain back below, and especially if we break back below 98.10, we could be on a way back down towards this trend line, which is around 96.60. The yen is just consolidating around this 0.382 fib from the most recent downtrend around 78.10. There's really no tradable event right there. I mean, you could go long, I guess, and respecting the trend line higher from the recent move. We can probably draw a trend line there. We get the idea. The trend line higher. You could go long there. You could set your stops below that trend line, looking for a continued move higher initially towards 78.30. Personally, I wouldn't risk it with that trade because the yen has been unpredictable at best lately. The New Zealand JPY continuing to move higher, which I find New Zealand pair in general I find a little bit interesting that the New Zealand is moving higher while the Aussie is dropping, because basically you would assume that their economic situation would be very, very correlated. There must be a move in the Aussie New Zealand or New Zealand Aussie cross. I'm not really sure how that one pans out. Anyway, so in the New Zealand JPY, we're continuing to move higher. The only thing that I wanted to show you this trade for is because it is still just a continuation of a break of that trend line we were talking about last week, and the 64.40 support. I suggested you could go long there if you wanted to and put your stops below the 64 level. If you have done that, I would definitely go stop, move it to break even now, and your target would be up to 65. The CAD JPY, just wanted to show you how it's so accurately once again played the support level at 78.80, is moving up to the 50 fib at 79.67. We break that level, we could be on our way back towards 81. If that level supports, it's going to lead to another test of this 78.90. This trade, this pair is acting very technical, and the rest of the M pairs are just sitting in no man lands, and I'm not very interested in making a trade in any of those crosses at the current moment. We will cover those in charts in Yen Talk that we will probably have sometime today or tomorrow. All right, everybody. So looking back, we're watching the Aussie to see what we do. If we get a bounce up to 128.20 or 103.40, New Zealand, it's all about the resistance zone, 83.50, 83, looking for a push hot lower. The Euro is sitting in mid-range, looking for a move above the recent 50 fib range, above or below. The pound, it's all about this support zone right here. The CAD. It's at 98.50. That's the key to the trade. And the yen is following the trend line, and it's trying to break above the 0.382, 78.10 fib level. All right, everybody, time to make the pips. I'll talk to everybody later. Happy trading. Follow the Twitter feeds for any trade setups or ideas I may have.